Well, thanks so much for joining us today. I'm Marlon Boulding, your tour guide to the ag commodities. Well, here it is, Thursday. That means it's weekly export sales day today, and we can take a look at the numbers that just came out from USDA mere moments ago. And let's run through these here and see what we think. Well, on the corn, we had 1.27 million tons that were sold this past week. And what we do here is we combine the current marketing year and the new crop as well. Soybeans came in at 1.7 million tons this time around. We had the soy meal at 128,800 tons, and we had the soy oil only 1,200 tons this week. And the wheat came in with a fairly low 264,700 tons. That was actually a marketing year low for the old crop portion of that. Now, let's take a look also at the grain, sorghum, cotton, and rice. And a bit of a surprise here, we had net reductions on grain sorghum, aka Milo. That was down 53,600 tons last week, so we went backwards there. We've actually done that, several times in the last 6 weeks. We have upland cotton at 186,600 tons this time around, and we had the rice at 64,700 tons. Let's bring in Brian Hoops of Midwest Market Solutions and talk about all this market action here and what we are seeing this morning. Well, the markets are definitely lower in the overnight trade here, Brian. The news that came out here on the weekly export sales, don't know if that was very supportive to the trade or not. Was the trade looking for these numbers?
Good morning, Marlon. These numbers, as far as the exports go, I think were disappointing to the trade. Wasn't expecting much better numbers, especially for corn, which we had a huge sale of corn to China last week and really didn't translate into much else. And so exports were below expectations. The soybeans were a 4-week low. The wheat sales for old crop were a marking year low. But here's the good news. We only need to be averaging 1 million bushel a week for wheat to hit the USDA forecast. There's only 6 weeks of the marketing year left, and so we're right in line with that number. For soybeans, we've almost already have the commitments to reach the USDA forecast. I think they're at 2.115 billion bushels for the entire marketing year, and we're just under 2.1 billion bushels. So we only have about 17 million bushels to go to reach the USDA forecast. So they're woefully underestimating our soybean exports. And we only need to be averaging about 2 million bushels a week, and this was over 16. So even though it was a 4-week low, it was still a very good number. And corn sales were over double what we need to be to reach the USDA forecast. So in that perspective, we're still taking bushels away from our balance sheets. We're tightening up those balance sheets. The USDA will have to account for that in subsequent reports. But just compared to expectations, a little bit disappointing. And then when you combine that with improving weather forecast, option expiration for the May contracts tomorrow, it looks like we could have a down day today and possibly going into the weekend as well.
Well, it seems like the fundamentals that you were pointing out seem to all be supportive to the trade, but why is it we're backing up here? Did we just flat out run out of gas here in the grain markets? I mean, it has been quite a run.
It's been a real big run. And, you think back to what happened with wheat when in February when Russia invaded the Ukraine, we pumped a lot of premium into the wheat markets anticipating strong exports. Well, we've pumped a lot of premium into new crop corn and soybeans, trying to entice acres to be seeded this year. And once that seeding begins, usually we take some premium out of the marketplace. And so, the weather forecasts are far from ideal, but it should allow for the farmer to get into the fields by next week. And even though it's going to be slow planting, slow emergence, we're so early in the growing season that the market really doesn't have to keep a lot of that premium in there. We can take some away, have a little bit of a correction in here, and still be in uptrending markets. Now, we also have options expiring tomorrow in the May contracts. If you look at the open interest numbers, and in theory, they try and make as many options expire worthless, you're probably looking at close to $8 on the May corn and puts and calls, as well as $17.20 May soybean puts and calls. That would be about the strike price where the majority of those options would expire worthless.
Well, let's look at the futures overnight then that were cooling off a bit. And with our quotes provided by Bar Chart here on the corn, we were down on July, down 6.5 cents at 803.5. We had December new crop corn trading 7 lower this morning at 741.5. Over on the soybean trade, lower there too. You had the July contract down 7 3/4 at 1709 1/4, and November down a nickel at 1524.5. On the wheat in Chicago, we had that July contract down 9.5 at 1088, and in Kansas City, you had that July contract down 10 1/4. Meanwhile, in Minneapolis, the July contract was actually down 3 1/4. We'll pause right here. We'll come back and we'll take a look at the beef and pork export numbers with Brian Hoops next. We reviewed the grain export numbers a little bit ago with Brian Hoops. Now let's take a look at the livestock side of the coin, and we'll go to the beef and pork numbers. What did we sell last week? Well, on the beef side, we actually sold only 15,000 tons last week. Meanwhile, on the pork side, we had sold a total of 12,900 tons. Let's go back to Brian Hoops and talk about this. Brian, both of those numbers are down from what we had here a week ago. What do you think about these potential numbers? Is it going to be kind of a weight on the market here today, if you will?
Yeah, in fact, those pork numbers that you mentioned, that's a market near low for this year. And so it's a disappointment. I think we've rallied up in that, the upper 120s in the summer months, and that has slowed down our export business. They've been much slower the last several weeks, and we're backing off of that area, trying to find that place that will stimulate more demand. And I think you're probably going to see some follow through selling from a poor technical close yesterday. And the market's trying to search for that area that will stimulate better export business to China in particular and to other countries as well. The beef sales number, not a great number either, but beef market, the cattle market has some other fundamentals at play. Very strong cash trade this week, probably better than expected, plus a slaughter pace that could be over 660,000 head this week if we get a very strong weekly or weekend kill, and that is showing great demand from the packers. They were out there buying on a Tuesday, which doesn't happen unless they need some cattle.
I'm glad you brought that up. That was very unusual to be that early in the week. And on the livestock summary yesterday, we actually had a market that was doing a little almost cleanup type trade, but it was still higher than what we had last week on the prices. Looks like we were up around 140 on the top end on a live basis. So here's where we finished yesterday on the trade. And just a reminder, on the live cattle board yesterday, let's see what we had on the June contract. We were up $2.05 on the close. We had the feeder cattle market yesterday, finishing the day with May up $1.70. Remember, August was up over $2. And on lean hogs yesterday, we had that June contract down $2.57 at 118.75. We'll see how things start out to start the session here in a little bit. Thanks, Brian, for the help. Brian Hoops, Midwest Market Solutions. Well, Suzanne, it's all yours.